Hey everyone, welcome to the Deep Dive. We're diving into economics today.
Sounds exciting.
It is, and we're making it especially for one of our listeners.
Oh, cool. What's the story?
Well, they wrote to us saying they want to understand the basics of economics, like supply and demand, and, what's the deal with inflation.
Yeah, a lot of people are wondering that these days.
Exactly. And they want to know, how does this all affect them as a young adult living in Canada?
Makes sense. It's like everyone's talking about economics, but how do you actually use that information in your everyday life?
Right. So we're going to unpack all of that, make it fun, relatable, and most importantly, useful.
Sounds good.
It's almost like leveling up in a game, right?
Yeah.
Learning the secrets to winning at adulting.
I like that.
So let's jump right in with the basics. Supply and demand.
Okay.
So think about those limited edition sneakers.
Yeah.
The ones everyone's going crazy for. Why are they so expensive?
Because everyone wants them, but there just aren't enough. High demand and low supply means you get a really high price tag.
Oh, yeah. Like those concert tickets that sell out immediately and then you see them online for 3 times the price.
Exactly. Same principle.
But how does this sneaker thing apply to the real world?
Yeah.
Beyond, trendy stuff.
Well, imagine a sudden cold snap in Canada.
Oh, yeah?
Everyone suddenly needs a winter coat, right?
Right.
But the stores might not have enough stock yet. What happens? Prices go up until more coats get shipped in and the supply can catch up with that new demand.
Makes sense.
And it works the other way, too. If a store has too many swimsuits left over at the end of summer,
What do you do?
they'll slash the prices to try to get rid of them. So yeah, it's all about finding a balance.
So it's not just hype. It's actually a force that affects prices for everything.
It really is. And once you understand how supply and demand works, you start to see it everywhere.
And it can help you make smarter buying decisions, right?
Yeah, absolutely. Sometimes waiting a bit or looking for alternatives can save you a bunch of money.
Now let's talk about the big one, inflation.
Uh-oh.
Our listener mentioned that it's like eating away at their purchasing power.
Yeah. It's like your money just doesn't go as far as it used to.
Right. It's like going to the arcade, and each game costs twice as much.
Hate that. So how do we even measure inflation in Canada?
Right. Good grip.
How do we know it's actually happening?
We use something called the Consumer Price Index.
The what?
It's the CPI. It's like a basket of everyday things that economists track, to see how the prices are changing over time.
Oh,
So your weekly groceries, your phone bill, your bus past the CPI. It's keeping tabs on all that stuff.
So if the CPI is going up, it means everything is getting more expensive.
Pretty much.
Oh.
And when prices rise faster than our paychecks, well, it makes things tough, especially for, young people just starting out.
Yeah, for sure.
So it's not just some theory, it's actually affecting our wallets. But why is it such a big deal for young adults in particular?
Well, think about it. You're probably dealing with entry-level salaries, maybe student loans, and all those living expenses keep going up.
Yeah.
Inflation on top of all that is it's like trying to climb a ladder that's slowly sinking into quicksand.
Oh, that's a scary thought.
It's tough out there.
So it seems like understanding economics is important. It's not just about balancing your checkbook. It's about making good financial decisions in a world where prices are always changing.
I think that's a really good way to put it, and that's what we're here to help with.
Exactly. We're going to break down all these ideas and give you the tools to not just survive, but thrive.
Yes.
So let's talk about some practical tips. Think of it like unlocking power-ups in the game of life.
I'm into that. What's first?
Let's start with investing.
Okay.
Now, I know what you might be thinking. Investing? That sounds scary. That's for Wall Street people.
Yeah.
But really, it's about making your money work for you, even if you're starting small.
Like planting seeds for a future forest, right?
Exactly. Even a tiny acorn can grow into a huge tree.
And you don't need a ton of money to get started.
So what are some good options for young investors? We always hear about ETFs and index funds.
Yeah, those are good ones to start with.
But what are they?
Well, an ETF, that stands for Exchange Traded Fund.
Okay.
It's like a basket of different stocks.
Yeah.
Think of it like a pre-made pizza with all sorts of toppings. You get a little bit of everything.
Instead of just ordering a plain cheese pizza.
Right. Instead of trying to pick individual stocks, which can be risky.
I see. So you're spreading your money around.
Right. And index funds are similar to ETFs, but they track a specific market index, like the S&P 500.
What's that?
It represents 500 of the biggest companies in the U.S., so it's like you're investing in a snapshot of the entire market.
So instead of trying to guess which individual companies will do well, you're betting on the whole market.
Exactly. And the good thing about ETFs and index funds is that they're usually low cost and they offer diversification.
Diversification, what's that?
It means you're not putting all your eggs in one basket,
Oh, that makes sense.
which helps to reduce the risk. If one company does poorly, it won't tank your whole investment.
So ETFs and index funds are a good starting point.
Yeah, they're like the beginner level of investing.
I like it. But what about making more money? That seems like an important power up too.
Oh yeah, for sure. And these days, with the job market changing so fast, you got to keep learning.
Keep leveling up your skills.
Exactly. The more you learn, the more valuable you are to employers, which usually means more earning potential.
Makes sense. But let's be real. A lot of young people are also dealing with debt.
Oh, yeah. Student loans, credit card debt, maybe even car loans.
It can feel overwhelming.
Absolutely. But the important thing is that you're not alone. And there are ways to manage it, like creating a budget.
A budget.
Yeah, it's like making a playlist, but for your money.
I love that. Like deciding where each dollar goes. Just like you pick which songs go on your playlist.
Exactly. And speaking of making choices, let's talk about that YOLO mentality.
YOLO. You only live once.
Yeah. It can be tempting to spend impulsively when you're young, but trust me, those treat yourself moments add up. And then you can end up with a mountain of debt.
So it's not about depriving yourself, it's about making thoughtful decisions.
Right, like maybe instead of buying those expensive concert tickets every month, you set some money aside for a bigger trip later on.
Find that balance between having fun now and planning for the future.
Exactly, and don't forget about refinancing.
Refinancing?
Yeah, it's like getting a discount on your debt.
Ooh, I like discounts. How does that work?
Basically, you replace your existing loan with a new one that has a lower interest rate, which can save you a lot of money in the long run.
Wow, that's like finding a cheat code in a video game.
It kind of is.
Yeah.
But you got to be careful and make sure the new loan is actually better for you. So we've covered supply and demand, inflation, investing, even tackling debt.
We're on a roll.
Looks like we've already leveled up our financial literacy.
We're just getting started. But before we jump into even more, there are two important economic indicators you should know about.
Tell me more.
The CPI, which we already talked about,
Yeah.
and the PPI,
The PPI, what's that?
the Producer Price Index.
Okay. So CPI is like that DJ at a party checking how much everyone's paying for drinks, right?
Yeah. The CPI tracks prices for the things we buy every day, like groceries, gas, rent.
Keeping the party going. So if the CPI is going up, it means inflation's getting worse.
Yeah, it's like a warning sign.
Now, what about this PPI thing? It sounds kind of sci-fi.
It's not that complicated.
Yep.
The PPI measures the average change in prices that producers get for their goods and services, like before they reach us, the consumers.
So it's like peeking behind the scenes.
Yeah, like seeing how much the DJ paid for those records before playing them for the crowd.
So CPI tells us what we're paying now. And PPI gives us a heads up on future price increases.
Exactly. Like knowing the cost of making smartphones is going up. You might want to get that new phone sooner rather than later. You know?
Before the price jumps.
Right. Or if you're planning a renovation, keeping an eye on the PPI for building materials.
Could help you time your project better.
Exactly.
So CPI and PPI, both important to keep in mind.
Yeah, like having a roadmap for the economy.
I like it. But what about those times when the economy gets really unpredictable? It's like riding a roller coaster blindfolded.
Well, we can't predict everything, but we can come up with strategies to ride those ups and downs. And remember, knowledge is power.
The more you know about how the economy works, the better you'll be able to handle those challenges.
For sure.
So let's talk about some strategies for dealing with both inflation and deflation.
Let's do it. So we were talking about dealing with those economic swings, right? It's like, having a game plan for those different money situations.
Yeah, it's about being prepared, not freaking out.
Exactly. Knowledge is power. The more you know about economics and personal finance, the better choices you can make no matter what's happening in the economy.
So let's get into it. When inflation is high, how can we protect our money?
Well, gotta remember that inflation makes your cash worth less over time.
Yeah.
So just hiding it under your mattress isn't the best idea.
It's like watching your video game coins lose their value.
Exactly. That's where you gotta think about investments that can outrun inflation.
Investments like what?
Well, there's certain types of bonds. specifically ones that are indexed to inflation.
Indexed to inflation. I don't think I've heard of those.
It means the interest payments on these bonds change along with inflation, so your returns keep up with the rising prices.
Oh, okay. So like it's a protection.
Yeah, like a shield against inflation.
I see. So inflation index bonds can keep your money safe during inflation. What about REITs? You mentioned those earlier.
Yeah. REITs, or real estate investment trusts, can also be good when inflation is up. They let you invest in real estate without actually buying property.
So like you own part of a building, but you don't have to deal with being a landlord.
Exactly. And because real estate usually goes up in value when there's inflation,
REITs protect you.
yeah, they can act as a hedge against rising prices. And they often pay dividends too, which can help with your spending power.
So inflation-indexed bonds and REITs are a couple things to look into when inflation's a worry. But what about when the economy slows down? Like with deflation?
Deflation. It's like the opposite of inflation, right? Prices are going down.
Which sounds like a good thing.
You'd think so, but it can actually be kind of bad for the economy as a whole.
How come?
When prices are dropping, people tend to hold on to their money. They wait, thinking things will get even cheaper later.
So they stop spending.
Yeah, and then businesses start to suffer. The whole economy can spiral down.
It's like a domino effect.
Exactly. So what do you do when deflation is happening? Well, one thing is to keep some cash handy.
Really?
Yeah, cash actually becomes more valuable during deflation, so you can snag some good deals if you're ready.
It's like waiting for those big sales after the holidays.
Exactly. But remember, every investment has its own risks and rewards.
Right. Not all investments are right for everyone.
You got to figure out what works best for your situation and your goals.
Going back to those sneakers for a minute,
Okay.
let's say you really want those pricey, limited edition ones. How do you decide if they're worth it?
Good question. It's all about figuring out what you need versus what you want. You got to make smart choices about your spending.
Yeah.
It's so easy to get caught up in all the hype, especially with social media and everything.
It's like that feeling of FOMO.
Oh yeah, big time.
Everyone else has them, so you feel like you have to have them too, even if you can't really afford it.
It's tough. So before you spend all your money, take a minute and ask yourself, do I really need these? Or do I just want them because everyone else does?
So it's okay to treat yourself, just not all the time.
Yeah, you gotta balance enjoying yourself now and having enough money for the future.
Makes sense. So it's like curating your spending habits, just like you curate your music playlists. Choosing what brings you joy without going overboard.
I love that analogy. And something that often gets forgotten in all this economics talk is the psychology of it all.
It's psychology.
Yeah, our emotions play a huge role in how we handle money. And they can often lead us to make bad decisions.
So it's not just about the numbers, it's about understanding how we think about money.
Exactly. Like fear and uncertainty can make you panic and sell investments at the wrong time.
Or like buying something expensive just because you're worried about missing out.
Yep. It's like playing a video game and just reacting to everything instead of thinking strategically.
So how can we get better at making smart money choices?
One thing is just to pause. Before you make a big money decision, take a breath. Ask yourself, why am I doing this? Am I feeling pressured? Is this really part of my long-term plan?
It's like a cool down period before hitting that buy now button.
Exactly. And it's also good to get advice from other people.
Oh yeah.
Talk to friends, family, or even a financial advisor. Getting different viewpoints can help you see things more clearly.
So it's like having a team to help you navigate your finances.
I like that. And remember, there are tons of resources out there to help you. Websites, podcasts like ours, books, workshops. The key is to be proactive.
So the more you know about economics and money, the more confident you'll be.
Exactly. And remember, it's a journey, not a race. You'll have ups and downs. But if you build good habits and stay informed, you'll be ready for whatever comes your way.
You'll be dancing through those economic changes.
Exactly. And hey, you might even start to enjoy the ride.
I like the sound of that. So let's recap what we've learned.
Sounds good.
First, supply and demand. They control prices in the market. From those cool sneakers to everyday things we need.
Then there's inflation. We learned how it's measured in Canada with the CPI and how it can really affect what you can buy, especially if you're just starting out.
And we talked about those smart money moves.
Yeah.
Like starting to invest early, getting better at what you do to earn more, and managing debt.
Yeah. It's like creating a playlist for your money.
Exactly. And don't forget about the psychological side of economics, how our emotions can mess with our money decisions.
Very important.
So be aware of those biases.
Yeah.
Take a moment to think before you spend a lot of money. and get different perspectives to help you make good choices.
And don't forget, there are a ton of resources to help you learn more.
Yeah, because knowledge is power.
Absolutely.
So before we finish up, here's a question to think about.
Okay, I'm listening.
What's one thing, just one small step you can do today to put all this into practice?
I love that.
It could be making a budget, looking into investments, or even just talking to someone about money.
Even small things can make a big difference over time.
So go out there and start leveling up your money game.
You got this.
And we'll be back with more on the next Deep Dive. Until then, keep learning and keep that money game strong. We've talked about so much: supply and demand, inflation, even deflation. But let's be real, the economy doesn't always play by the rules.
Definitely not. Things happen that no one expects. It can totally throw off your plans, like
Like what?
sudden changes in the government, global pandemics, even new technology that changes everything.
That's like playing a video game where the rules keep changing and new obstacles just appear out of nowhere.
Exactly. We can't predict the future.
Right.
But what we can do is learn how to adapt, develop a mindset that can handle those uncertain times.
So it's not enough to have just one plan. Got to have a backup plan and a backup for the backup plan.
That's a great way to think about it. You got to build some resilience into your financial life.
Resilience, okay.
Yeah, like having an emergency fund, for those unexpected expenses.
Mhm.
And diversifying your investments. Don't put all your eggs in one basket, right?
Right.
And don't go crazy with debt. Overextending yourself can really hurt if things go south.
It's like having a safety net so you don't fall too hard if you trip up.
Exactly. And the best tool you have for dealing with all this is knowledge. The more you understand the economy, the better decisions you'll make, even when things are unpredictable.
So stay curious, keep learning, don't be afraid to ask questions.
Yes.
It's like leveling up your skills so you can face those financial challenges head on.
Exactly. And remember, you don't have to do this alone.
Yeah.
There are tons of resources to help: financial advisors, online tools, even podcasts like this one.
And something really important. Don't be afraid to talk about money.
Oh, yeah, for sure.
It's not a secret. Talking to friends, family, even a mentor can help so much.
Yeah, sometimes just talking things through can help you avoid big mistakes.
Okay, so let's go back to that challenge from earlier.
Which one?
What's one small step you can take today to put all this knowledge into action?
I like it. Keeps people accountable.
Could be anything.
Yeah.
Setting up a budget, doing some research on investments, even just having a chat about money with someone you trust.
It all starts somewhere.
Exactly. And remember, being good with money doesn't have to be boring.
No way.
It's about having the power to reach your goals, to live the life you want.
Yeah, it's about making a plan that matches your values, whether that's traveling, starting a business, or just feeling secure and happy.
So go out there, make smart choices, stay informed, and remember, you're in control of your own financial future.
Absolutely.
That wraps up our deep dive for today.
Hope you enjoyed it.
We hope you've learned a lot, and we hope you feel ready to take charge of your money.
Keep learning.
Thanks for joining us. We'll see you on the next deep dive. Until then, keep exploring, keep learning, and keep that financial game strong.